Hello, everyone. We are live again. I think week 12, maybe. I need a countdown, actually, because I can never remember. We've got a few people jumping in, so we'll give everyone a couple of minutes. I have Alex here today. Alex is an accountant from Espresso Accounting based on the Gold Coast. We are going to be diving into all things accounting. We're happy to take questions today, but otherwise I have a little bit of an agenda to work through. Alex, do you want to give people an idea of the type of person you are? I didn't tell you I was going to do this, but does pineapple belong on a burger?
Yes, absolutely.
I would agree with that. And what about coriander lover or coriander hater?
You know the answer to that. I'm a coriander lover and I'll shout it from the rooftops. Love Southeast Asian food.
This is why we get along, because we both love pineapple on burger and coriander. So if you are that person as well, you are our people. So Alex, accountant, how long have you been in the accounting industry for?
I would say it's now 15 years, actually. 15 and a half years. Time
flies when you're having fun.
Yes, indeed, when you're crunching numbers.
And there's lots of different areas of accounting, because I think people know what an accountant is, but not a lot of people actually understand what they do, and also that there are different types of accounting as well. Do you want to dive into that a little bit to give everyone an idea?
Well, I might answer your question with a little story. I'll try to be brief. But when I started my accounting degree at 22, after my first career didn't really go the way I'd planned, I didn't even know what an accountant really did. I didn't know what accounting was. I'd never studied it before. So I'm sitting in my first accounting subject at 22 thinking, well, I'm not going to be an accountant. I don't really know what that is or what they do. I see myself probably working within a business in a finance manager, accounts manager type role, or working for the ATO. Those were actually my plans when I first started my degree. So I didn't end up landing into public practice until 2013 due to a employment change, living out in the middle of the desert and not having too many options of employment. And I loved it. I loved working in public practice and being able to, I guess, be on the other side of the ATO, trying to help people comply rather than beating them with a stick.
Because you did work for the ATO, didn't you?
I did. So I started the ATO grad program in 2011, and that had been a real goal for me, but life took me elsewhere and my husband got a job in Mount Isa, and they didn't really like the idea of me taking secured records to the middle of the desert. So unfortunately, I had to leave the ATO.
Yeah. So a lot of people know that accountants do tax returns. What else do they do?
Well, we do all things, but I think accounting is more about relationships than it is about numbers. And I feel that way because there's no way someone is going to give me all the information I need to help them without first building trust. And that comes with having a really effective working relationship. So for me, my role is not just processing tax returns, although I do that too. I also provide a lot of general business advice, and that can come from someone who's looking to start up a business, someone who's looking to sell a business, someone who needs assistance with setting up accounting software. I also provide, obviously, financial statements for companies, trusts, partnerships, self-managed super funds. But I also do bookkeeping as well, asset compliance. You know, there's so many facets to being an accountant, and being a generalist accountant like I am in public practice. I just help my clients with whatever they need, whatever that is, really.
So you are more in front of individuals and small to medium business owners. Yes. What about, can we have, it's not necessarily relevant to what the audience probably are in a position to know about, but I still find it interesting that there are like forensic accountants out there as well.
Yeah.
What do they do?
Well, I guess they're mainly involved if there's a suspected fraud. So more in an audit type capacity where they're reviewing financial records for large sums and deep diving into financial records.
What's that show on Netflix? I think it's Netflix or Stan. Ozark? They've got a little bit of financial accounting in there. I just love that stuff. Like, I think that's what I think of, private investigator stuff. So in your role, working with individuals, small to medium business owners, what's your favorite part of the job, apart from the relationships? Because I know that was going to be your answer. So dive deeper than that. What do you love about being an accountant?
Well, actually, while I was at Xerocon recently, the country manager for Australia, Will Buckley, asked the question to the audience, which was, what is it about what you do that brings you inner peace? And I just loved that question.
Yeah.
And when I actually thought about it, for me, when I sit with a client in a meeting and I see that concern, stress, anxiety, frustration on their face and in the words that they're using, and then fast forward 15 minutes, 30 minutes, an hour later, and I just see this, thank you, I get it. I feel so relieved. Thank you for helping me. Thank you for decoding it, not making me feel stupid.
Yeah.
And I just see that change from worry to relief. That's the best part of my job.
Yeah. And what about the least favorite part? What do the accountants call it? The pothole?
The pothole, yes. Never-ending dramas with the ATO and the burden of ongoing deadlines and obligations and demands from the ATO. It's really frightening for a lot of clients. They feel very stressed when they're getting correspondence from the ATO. So helping them navigate through that is obviously a big part of my job and something that I want to do to take that stress off them, because as long as you're engaging with the ATO, it doesn't need to be stressful.
Yeah. And how does that tie in with, a lot of people are noticing that they've actually got a tax bill this year or a very small tax refund. Can you share why that is happening to so many people this year?
So I'd say the big reason this year is the removal of the low and middle income tax offset, which we saw in previous financial years during the COVID era. So last financial year, a medium or middle income taxpayer, someone say who's earning around $80,000, would have received an additional tax offset of $1,500 in their tax return. So with that being removed as of 30 June 2022, last financial year, 2023, we didn't have that additional $1,500 in our tax return. So if they had not had the correct amount of tax withheld throughout the year, for example, if they had a HECS debt and hadn't advised their employer, or they had very minimal deductions, or there was an additional payroll period in that year, they may not have had enough tax withheld and no longer had that offset to take away that burden of a tax payable. But I do want to bust that myth of the tax refund.
I was just about to say that. You literally read my mind. There is it's probably not a misconception, but a misunderstanding of how it operates. So a lot of people, I don't even know where to start with this, but I would rather actually have a tax bill, because that means that I've kept the extra money in my offset account potentially, rather than the ATO having it. They don't have an offset account, but the ATO having it in their offset account. So I'm not opposed to getting a tax bill, because at the end of the day, there's an amount that you have to pay, and that calculation, it is what it is. Do you want to elaborate on that a little bit, and your experience with that as well, and the discussions that you have with people about that?
Yeah, well, I see a lot of disappointment about low refunds or bills. And what I would like to say to that, particularly this year, is I know people are struggling, right? So a lot of people are relying on that tax refund, and we've become accustomed to tax refunds. And I think that's why people are feeling so disappointed or disheartened this year. As you said, the ATO has been keeping your money in their bank account for the last 12 months. If you're getting a refund, that means you've actually overpaid tax throughout the year, and that could have been in your bank account. Whereas if you get a bill, it means that you've had that money in your bank account and have potentially earned interest on it. For some people, that might only be a couple of $100s. For others, that's thousands of dollars that's been sitting in the ATO's account. So it's not actually a good thing to get a large refund, particularly in an environment where interest rates are increasing, and you could have got a lot more bang for your buck if it was in your bank account. But we've become very accustomed to tax refunds, and it's not really a good thing.
Yeah. And what would you say to those who the way that I'm going to put it is dodgy accountants. Like, go and see my accountant. He's so good. He'll claim everything, even if you know you're not entitled to it. If something comes up in that, if that client is audited, who is actually responsible for those deductions? Is it the accountant or the individual?
So when you sign a tax return, you're signing to say that you've got the accurate documentation to substantiate all of those claims that you've made in your tax return. You're also saying that you've reviewed it and you understand what's in there. So I'd be very careful when you're signing your tax return to make sure that you actually can substantiate all of the claims, and that you may not know that you have a dodgy accountant, and that's not your fault, obviously. But you need to review. And if you're not sure about something, you need to ask your accountant.
Yeah.
I have seen, unfortunately, I've inherited clients in the past where they've had an accountant who just has a standard claim, and they just do that as a common practice. And if you've got any concerns about your accountant, obviously going to speak to them in the first instance. And if it's not resolved, the Tax Practitioners Board is the correct authority to be discussing those matters with if you think that there's something dodgy going on.
So going back to what we were talking about before I got sidetracked with dodgy accountants.
Yes.
If someone has a tax bill and they've got no money in their account to pay it, what would you suggest that they do?
I guess it depends on the timing of when you're preparing your tax return. So if you're preparing your tax return at this time of the year and you're preparing it through a tax agent, I just want to say you have time. So your tax agent gets an automatic extension of your tax return for lodgement until the 15th of May of the following year. So for the 2023 financial year, that would be due on the 15th of May 2024. And that payment's not actually due until the 5th of June. So you've got time.
So one thing potentially delaying actually lodging then?
Yes. So we can delay lodgement, and we would at least need to delay that until probably after Christmas so that you do automatically get that extension. But a lot of people will just lodge on the 15th of May, and then you will automatically get the 3 weeks after that to pay the bill. And the benefit of doing your tax return early, at least you know what that amount is, so you can start to prepare for that.
Yeah. And how about payment plans? Is that a thing?
Yes, absolutely. And I guess the best thing to do is to actually engage with the ATO. For smaller debts, it's very easy to set up a payment arrangement online, and that can happen in minutes. And you can set that up weekly, fortnightly, monthly. They will probably ask for at least 5% of the balance as an upfront payment, and then you can work out an amount that suits you that you can afford each week. But I think the best thing to do either way is to engage with your accountant or the ATO directly as soon as you are aware of that, so that you can get the ball rolling. The worst thing to do is pretend it's not happening and not engage, because that makes it a lot more difficult to get a payment arrangement. Plus, you start accruing interest, and you don't want that. It's very, very high.
Is there any way to have that interest removed?
Well, a lot of the time on smaller debts, they won't even impose general interest charges, or you can ask to have that remitted at the end of the payment arrangement period. And if you've been consistent and you're compliant with your tax obligations and you've been consistently paying down that amount, they're often willing to remit interest charges.
Yeah, so do the right thing and you don't get what you don't ask for generally. And you can either do that directly with the ATO or via your accountant. That's something that I know that you have done for your clients in the past. I've seen a few instances lately where people have arranged payment plans for their debt. And this is predominantly in terms of small business owners.
Yes.
And that's fine to do that. But then they also haven't factored in to withhold extra tax, like set aside extra tax in the interim of, like, what am I trying to say? Withhold extra tax of the income that they also then earn.
Future tax obligations.
What's the best way to navigate that if someone has a tax bill and they're paying old tax plus they've got to pay current tax?
Well, I guess it's doing a review of what your current earnings are so that you can make sure that you're putting aside sufficient tax at your marginal tax rates, or depending on what the tax rate is for the entity that you're operating through, making sure that's getting put aside on a weekly, fortnightly or monthly basis into a separate tax savings account. I always recommend that for my clients when they're starting businesses. They have a transaction account for their business and a savings account for their tax and superannuation obligations, and just getting into a regular habit of putting money aside for that. You may not be able to cover it all in full, but at least it's working towards those future obligations, but not overcommitting yourself to the existing debt. So having an understanding of what you can actually afford, speaking to your accountant or your financial advisor, depending on what's most appropriate for you, or financial coach, depending on the circumstances, and working out what you can actually afford. And then, as I said, engaging early and having those conversations with the ATO or getting your accountant to do that. Really important.
That is perfect segue into something else that I wanted to pick your brain about today. And that is in relation to someone who is employed, but they acknowledging that things might be a little bit tight, or they do just want to improve their financial trajectory and earn a little bit more income. And so they're starting to think about starting a business. And there's lots of different ways that this can go. It can start as a hobby. What is, from a tax point of view and a business point of view, what defines a hobby, and when do people actually need to get a bit more serious and apply for things like an ABN, an Australian business number, or in terms of like licensing and insurances? Where do we start with that?
That's a big question.
I know. Sorry.
No, that's okay. So I'll do my best to navigate it. I guess the difference between a hobby and a business is really just the consistency of what you're doing, the organization of what you're doing. A hobby is probably a little bit more haphazard. It might be something that's very small. You know, you might be just selling something at the market ad hoc. You might be selling a few things online ad hoc. But then if you start to get more organization, you set up an ABN, you set up a business name, you start to look into insurances, you might be looking at employing staff or getting a business premises, signing a rental agreement, getting uniforms. Once you start to, there is no definition of what a business is, really. It's based on the factors in common law that represent what looking like a business is. So if you've suddenly got branding on your car and business cards, and you've set up a website and you've bought stock or you've employed someone, well, that would probably meet the definition of a business. It may not be profitable, but that's not really the defining factor. But if you start to have an organization about you, that's much more likely going to be viewed as a business compared to someone who's just doing a few markets or selling a few things on Marketplace, and it's a more ad hoc, on the side arrangement.
So if someone has decided that they want to start a bit of a side hustle, apart from maybe opening up a separate bank account to keep things nice and clean with what is the side hustle and what isn't, and applying for an ABN and maybe registering a business name, what else does someone need to do?
It depends on what industry you're in, because if you're in a type of professional services, there might be specific licenses, registrations, insurances, memberships that you need to have as part of starting up that business. For example, as an accountant, I can't tell anyone I'm an accountant and that I can do your tax return if I don't have a tax agent registration and a public practice certificate with the CPA, who I am a member of. And if I want to earn more than $10,000 in my business a year through the CPA, I need to have a public practice certificate. So that is a professional requirement, and that will vary from industry to industry. But if you are in a specific industry, you probably need to reach out to your professional association or who you are a member of for the requirements for you to be able to start a business, because there might be boxes that you need to tick first before you do that.
So if someone is wanting to do this, how would an accountant be able to help, and what would that process look like?
Yeah, so I think if you're wanting to start a business, having a new business consult with an accountant can be really helpful, because they can tell you about the different types of structure that might be suitable for your business. And I always say it's much better to set things up right from the beginning than try and fix it later on. You can always change your structure down the track to scale for growth if that's what you need. When you're starting a small business, you might start as a sole trader, and that's completely fine. But you might find as you grow down the track that you've outgrown that structure. So you might need to talk to an accountant about, do you need to be in a company or a trust or a partnership, or is there another more suitable structure? And you're going to be looking at things like asset protection. So what structure's right to keep your personal assets protected in that situation from your business assets. You'll be looking at the tax implications. So what's a better tax outcome for you? And then looking at when you're employing as well. You know, sometimes if you're taking on an apprentice or an employee, there might be a better structure for you than the one that you're currently in. So having those conversations can be really valuable because you can get that insight. And, you know, not all of us know how to start a business. No one really tells us how to start a business. So to be able to bounce that off someone else can be really valuable.
We've had 2 questions come in. I'm going to start with what looks like the easier one for you to answer. So many of us have regular accountants to do our tax return, but what about strategic questions during the financial year to help do better? Do accountants charge an hourly rate for consulting? Sometimes we feel guilty emailing our accountant when it's not the actual tax time. What do you have to say about that?
So I guess it depends, and every accountant's going to be different. I will never charge for an email. I just don't. But if I need to provide specific business or taxation advice, I will always quote for that upfront.
So it's quoted up front, so you're not up for like a sudden bill in 6-minute increments or anything like that.
Well, I'm sure that happens in some instances. I can't speak for all accountants. And I do know that there's a lot of fear around if I pick up the phone, the clock starts ticking. And I hear that from people who come to me as new clients, that's often a reason why they're leaving their current accountant, because they feel like they're getting billed for every minute that they're speaking to them. So I would say if you do have a specific question and you want to reach out to your accountant, maybe when you send that email or pick up the phone and do that, just say, this is what I need. Can you please provide me with a quote for that work? So that then you can know that in advance and you're not getting a rude shock for a 5-minute conversation. Yeah.
And full disclosure, Alex is my accountant, hence why she's here today. So I think it's really important as well that you do have a good relationship with an accountant and you're not hesitating to just pick up the phone, because it might be a question that is solved within 2 minutes. But if you go away and don't have that conversation and just do whatever you think is right, that could be a really big mess potentially, which will cost more. So it's really important to have that relationship and that open communication.
And on that point, Lexi, I just wanted to say I would always prefer a client come to me and talk to me, and the price or the cost not be the barrier to that conversation, because sometimes it's a really important conversation that needs to be had before a decision is made. So I would always prefer my client come to me and not fear that they're going to get a bill for that, so that we can resolve anything that needs to be resolved before a decision is made.
And this question, I don't know if you want to click on the chat, the little speech bubble, so you can actually read it for yourself. But it's a question in relation to capital gains tax. It may be worth a conversation after this, but if there's any comments that you want to make, I'll just give you a moment to read it. Actually, if you can read it out loud at the same time so that everyone else that can't read it.
Okay, so bought the property in 2021 for 500K, demolish it. 1 year later, subdivide to 2 lots. Then a year later, sell one vacant lot for 350, build a house on the other lot. Wait 1 year later, sell the house for 700K. How to calculate the CGT on the lot and the house. That would require a separate CGT calculation that I cannot answer in 5 minutes.
That's okay. In relation to capital gains tax, actually, this is a question that I sometimes have with my clients, in that they might have an investment property or some shares and they've sold it and they've triggered a capital gains tax event. That extra, the profit, is then added to someone's taxable income. And then, so that is going to mean that the tax payable depends on what other income you have. Do you have anything to say in relation to capital gains tax, how it works, when it might be appropriate to engage with an accountant for a better outcome with that?
I would often recommend, if you have a capital gains event that occurs in a year, that you should reach out to an accountant so that you can get that calculation right, because it is a very complicated area of tax law that requires a lot of information to be able to provide those calculations accurately. So if I can just speak to some of the basics about CGT, is obviously if you do sell a CGT asset, so as you've mentioned, shares, property, cryptocurrency, which has been fun over the last couple of years. If you do sell a CGT asset, that will trigger a capital gains event. Now, that could be a capital gains income or loss, and it just depends on what the cost base of that asset was, either at the time of purchase or when it became for investment purposes. So when I'm talking about, say, your main residence, that becomes an investment property. So we need to recognize whether or not that property, so asset, house, has been held for more than 12 months, because if it has, and you are a individual, a trust, or a self-managed super fund, there is a CGT discount applicable. So for individuals and trusts, that's 50% of the gain.
I'm glad that you bring that up, because this is another conversation I have with a lot of people, particularly in relation to accounts like Raise, whereby we're doing micro investing, and people are using that as maybe savings for Christmas. And so they use the roundup, they park it all in Raise, which is actually invested, and then they pull it out at Christmas time. And so that hasn't been invested for a full 12 months, in which case they're not able to access that 50% discount. So it is really important to be aware of all of these things, because it can make a difference. But that brings us to the end of our session today with Alex from Espresso Accounting. Thank you for joining me on a public holiday on the Gold Coast. And if you have any questions for Alex, feel free to reach out to her at Espresso Accounting, including that question about capital gains tax. But thank you, and we'll see you next week.
Thanks for tuning in. Bye.